Doing. Let me get this screen shared. Now, let me know if I'm bumping the desk. This morning, I was bumping the desk too much, and Oracle made a comment about it. Sometimes I don't know. Sometimes anyway, I'll try not to do that, but I'm hoping, I think this microphone sounds a lot better. I guess I need to get a headset microphone because I like to get up and pace. I like to, sometimes I wrestle with the dog while we're talking or pick up the guitar. Anyway, I'll try to quit doing that though. All right, guys. Thank you so much for being here. So let's see what the heck is going on. This morning's show was good. It was short. There was only about 8 people there. I don't think it showed the YouTube didn't post it, the link or whatever, and you guys weren't there, but we talked about some stuff. But we'll do more today. All right. So the NASDAQ is down less than half a point. So I'm going to call that basically unchanged. And look where it landed. It's right here where it's balancing. It's just balancing between 25 and 24.6. I mean, it's gone lower, but it snapped right back. But I mean, the main volume is just happening right here. So we know where that point of control is, right? And I'd say neither the bulls nor the bears are really in charge on the time frame I'm watching. Should be interesting to see who wins. SPY is down a quarter point, basically unchanged. Now their volume profile has kind of a little bit of a different look than Q's. It looks like the Q. Jackson, what are you doing in there? Come back in here. Come here. Hang on just a second. Jackson, what are you doing? All right, he was getting into trouble, messing with something he wasn't supposed to. All right, but I would say just relative to the time frame I look at, it looks like the SPYs have left more volume at a higher level compared to the Qs. The Qs are putting in more volume down here. All right, building a base, let's hope. So now let's look at a little Bitcoin. Gosh darn it, 66,000. I mean, we've already taken out this trend line. I mean, that, it's just made with 2 points. I could redraw it. And but anyway, but I guess the charitable interpretation is it also quit right here, kind of at a level where it's been balancing, at least for a couple of days. And it's also balanced higher. It's actually slipping a little bit out of its bigger balance, but, I just hate to see that doing so poorly. I saw somebody today say that they could see it go to 35 or 40. What do you guys think about that? Do you guys think it can go to 35 or 40? I mean, anything can happen. Yes, it can do that. Do you think it will? I mean, darn it. I mean, anyway, I guess we'll see. I guess if that is true, if I believe what that guy says, I should get out of blocks. Can you imagine what would happen to blocks if Bitcoin went to 35 or 40? Not the blocks isn't, an awesome fund but it has to invest in what its portfolio says. The portfolio says it invests in Bitcoin. So hopefully that won't happen. Of course, if Bitcoin does that, it's not just going to kill blocks. It'll kill a lot of other stuff too. Like, it'll continue to kill COIW and CONY, and it'll probably kill the whole market, honestly. All right, well, if there's a contagion or something. All right, so that's silver. Let's check out gold and oil. Gold is at 5,000. Boy, this is kind of an unusual balance area. I think they call this a shelf in volume profile. Mark would probably know better than I. He's more into volume profile and order flow. But I mean, look at that. I think that is called a shelf. And the idea is it's supposed to turn trades around too. It's supposed to act as support or resistance, depending on which side you approach it from. But look at this shelf over here. Anyway, interesting. This thing has just built out a ton of volume just, since it crashed. it looks like maybe it was going up on low volume. That's obvious. You know, that's in hindsight. It's hard. I mean, going up on low volume, and that's kind of a recipe for disaster. Maybe it was just because of short covering, but it wasn't two-way volume. So boom, then it crashes and it goes too far. It goes back to where there was also low volume. So then there's, you know, there's buyers down here, sellers up here, and then it settles right back in the middle, and it's just building out this huge volume area between 5150 and 4800. I'd say whichever way, if that breaks, that might be a decent swing trade. If you can get a bullish break, maybe you swing for all-time highs. If you can get a bearish break and acceptance, maybe you swing for, you know, a challenge of 4,400 or something. Anyway, not financial advice. I'm not like I always say, I'm not an expert trader, but I do like to, I can take a pretty good guess. I can guess about as good as some other people. All right, well, let's look now at oil. Little light sweet crude, symbol is CL. Now this thing's been trying to break out, and it has. It has finally broken this. It's finally broken out of this. And this is just on this, on this time frame. You could go back to a longer time frame, and it you know, who knows? But on this time frame, yes. So if we get acceptance above that, which it looks like we probably have, that, you know, bulls are going to try to use that to rally off of. We'll see. Hope it's not a bull trap. All right. Mark's here. Alan's here. Skeptic is here. We have William. It's Bear 30. That's right. It was actually 420 when the show started. The show, I put it together at 4:15, but I tried to give it 10 minutes so it could post it to places. So I scheduled it for 4:20. All right. So Mark is agreeing with me exactly, Max. Neither the bulls or bears. Oh, have control. Yeah. More than a few days at time. Yes. Yes. But for option traders, it has enough. Yeah. Oh, yeah. For premium sellers or whatever. Heck yeah. Okay, Andre, I have not heard any updates on nukes or weapon. I did hear the update that they're delayed. Did you hear that update? They were supposed to be out today, but they were delayed. And David posted about it. And I don't know if I saw it. I think Marcus or somebody post or put it in Discord or somebody, one of you guys put it in Discord. So yes, I saw there was some kind of delay. And they aren't going to be out when they were supposed to, which was going to be this week, I think. So Marcus has his ear to the internet, but that was on Twitter though, wasn't it? I could go find it, but but if y'all can't wait for nukes, have a look at SMRF. Let me get through with the show, then we'll look at some tickers. Let's just look at some other basic stuff, because I know people like to talk about these high yield funds. I do as well. Okay, Blocks was up 1.39% today. Okay, well that's pretty good. We'll definitely take it. We will definitely take it. Now let's see if this is dividends factored in or dividends not. This dividends not factored in. Okay, but even with dividends factored in, Blocks is still on a new low. But it hasn't been doing very well, to say the least. ULTI, speaking of hasn't been doing very well. Now this is ULTI as in igloo, as in Rex income, ULTI. This one actually was only up 10 today. Wow, that's it. This morning it was up way more. All right, well, let's see how old K-Yield does. K-Yield was plus 1.15. That's respectable. I'd expect ULTY to maybe be up a half point, although it was up more this morning, but the other one's pulled back. So 1.5, that's pretty good. That's pretty good. ULTY has kind of caught a bid lately. All right, well, I don't get used to it. It probably won't last, but it's doing well. You know, comparatively well. Okay, let's look at some other ones. What about ISSB? This is the new income stack product. This one was up 1.1. This one is stocks and bonds, but it's leveraged. So this one is on the more dangerous side. It's because it's levered. So let's see. Oh, there's ISBG also, and it's levered. The individual positions aren't levered. It's just 100% stock, but it's also 100% gold at the same time. So as long as they go opposite directions, they can act as a hedge against each other, and sometimes they do, but not lately. Not lately. Everything's been going down together. Bitcoin and gold. Now this one is bouncing today. It's up 2%. Nice job. Okay, so let's look at a meme Y from Tuttle Capital. This is definitely a diva. This was up 2.09%. Good job. These guys do these lightning spreads, so they get some extra upside. Great job. And then let's look at old Mago. This one's also from Tuttle. Now this one is down 34 basis points today, but just for comparison purposes, what was YMAG down? YMAG was only down 8 basis points. What was MAGY down or up? And MAGY was plus 41. Good job, MAGY. All right, so other divas. Let's look at old QLDY. This is a lightning spread fund too, so it gets extra upside, but not today. It was down 57 basis points. But at least it hasn't taken out its low, like, all those other ones have taken out or on a lower low recently. But this one's not doing great either. It needs the NASDAQ to go up. It looks like if you bought it the day it came out, you're even. And I think I did buy it close to the day it came out, or within a few days afterwards. So, and it was doing well for a while, but market pulled back, and so did it. All right. Let's see what else is moving. Let's look at this. I signed up for ETF Central last night, and anyway, I put this in here just as a way. I never pay attention to the to how much money is coming in or out of the fund. It's cool that, so I put all the divas in here, all the ones that I put my whole, I put blocks, K-Silv, K-Gold, K-Yield, ULTI, ISBG, ISSB, YQQQ, Meme Y, Mago, ATTR. I basically put my model portfolio in here. QLDY, Salty, and ULTY. ULTY has lost 58 million in AUM lately. It's still hanging in at 1.04. But anyway, I didn't know if anyone else uses ETF Central. I'm just trying to mess with it. But there's a cool comparison tool on there. It's some new stuff. All right, so let's check out stocktools.app. And it should already be up somewhere, but if not, it's going to be right here. Oh, yes. Let's look at the index buffer report, actually. And then maybe some stock tools. But yeah, I'd love to talk about that whatever tickers you guys want to talk about. We can darn sure do it. I was supposed to make content today, but I got in Discord and we started having a discussion, and I've been hanging on Discord all day, but I'll shoot the content soon tonight. All right. So look at that. I was talking bad about YSPY or about Granite shares today. And it's the only one in the S&P category that's up other than Feed and 5E. Look at Feed and 5E. What are these guys doing? Do they finally have it figured out? No. Something they have is bouncing it. Anyway, that fund's terrible. Boy, TSYX and WDTE look poor also. Now, TSYX has leverage, so they have an excuse. WDTE does not have an excuse to look that poor. So keep an eye on them. SVOL is down. That one we really don't follow. ZVOL's down. Then we have NLSI down. That's supposed to be a long short fund. That one shouldn't drop 0.75 of a point. I wonder how that one's been doing. Maybe we should look into that one a little bit. Anyway, all right. Well, NASDAQ, it's better news. LFGY is plus 1.6. ULTY is plus 1.5. Man, freaking Yieldnex having a good day to have, and they manage blocks also. Same people do the trading for blocks or sub-advised blocks. David picks the stocks, but Yieldnex crew does the options. But they do them at David's discretion, though. I mean, David's instructing them what to do. But anyway, that crew had a good day today. Congratulations. And look, even Salty. Now, it said Salty was up yesterday, and it was a bad print. And I looked later, and it wasn't really up. So I'm not going to fall for that again. I'm going to go to FinViz and see that somewhere else, because Salty was not really up yesterday. And I meant to tell you guys, in the morning, it said it was up 1 point or something. But then I looked later, and it was never up. But yeah, this was plus 1.15. Now, it did pay a dividend, but it also went up on X day. It paid 37 cents and its NAV went up. So Salty's already probably recovered the dividend. I mean, depending on, you could look here. Last night's close was 28.66. Today's close, and these charts do not put the dividend back in. Okay, so anyway, today's closed was 28.99. The difference between 66 and 99 is 33. They paid a 37-cent dividend, so they have 4 more cents to go to make up to recoup the dividend for this week. This one's not a growth stock, obviously. This one's for if the market crashes. It'll turn into a winter is what I'm hoping. It will. If the market crashes, this will look like winter did whenever Misty crashed. All right, so let's see what else we have here. But yeah, that was a good day for the Yieldmax crew. Then we have K Yield. Howard's was up 1.1. YMAX is up 0.5 point. ULTI was only up 40 bips. Anyway, great day for the Yieldmax crew. Let's see who was doing bad. WPay, the Round Hill was bad. And Triple QI from Defiance was bad. WDTE got cleaned out today, too. Triple QY is their brother fund, sister fund, whatever you want to call it. Ooh, so I don't know what's going on over there. Anyway, no one I know has any of those. I used to, but then when I used to have that for my risky fund. But then when ULTY came around, I thought that was a better risky fund. So I switched for ULTY. Then lately, as you guys know, I've switched to K Yield and blocks, basically, because I've been selling off ULTY. All right. So, yeah, clips down. Usually had a good day. All right. What do you guys want to look at? So let's see what you guys are talking about. Okay, SMRF. So this is one of these. This better not be a closed-end fund or an auto-callable. If this is a closed-end fund or an auto-callable, I'm going to shut the show down. Oh, okay. I'm just joking. Okay, so what is this thing? We were talking about this today. It's nuke plus it's tech. And who was, I think it was Mark that said, well, it's fine on the nuke, but I'm out on the tech. All right, so let's see here. I have to be careful not to kick the table when I lean back, but I don't believe I did at that time. I'm trying to get more conscious of the old microphone was so bad I could do whatever, and it was anyway, but this one picks up everything. All right, so SMRF, yeah. I mean, I clicked on it, tried to get me to take it to the web page, but it's not linked yet. So, anyway, DJan says market is crazy. I'm dropping almost all income ETFs. Div appreciation is great, but only from companies that can grow NAV as well. Heck yeah, I hear you, DJan. Okay, just read a Seeking Alpha. Some famous investor said this will be the last lost decade due to the run up in indexes. You had yeah, probably so, with all the helicopter money and stuff. Even if there's not a crash, maybe we have a recession and maybe we drop 30% like we did in 2022, and maybe we just recover super slowly and we have kind of like we did from 2001 to 2003. The market goes nowhere. And then maybe we go up, maybe we, I mean, I could see that scenario. I could definitely see that scenario. And wouldn't that just be terrible also? Because it's the decade that I'm, trying to retire, but whatever. I mean, I'll be fine. But yeah, it's going to make it extra challenging. Hey, Henry, I guess your name's Henry. If you want to be called something else, put it in the comments and I'll call you by Joe or whatever your name is. Really. But all right, Marcus, what are you talking about here? Yeah, keep all your income ETFs in a manageable amount, not the mass market conditions. Yeah. So we were talking in Discord today and I compared high yield ETFs to leverage. And I got pushback on it, and maybe that wasn't the best comparison, because high yield ETFs, that one thing they do is actually dampen volatility. So in that sense, maybe that wasn't a good comparison. They especially dampen volatility on the way down. Now they also dampen total return, but what I meant by that is the extra element of even something like SPY-I. SPY-I tracks the SPY, but it pays you 12%. So you get the 12% early. In fact, you get the 12% whether the market goes up or not. So in a year when the market goes down 10% and the funds paid you 12%, your NAVs dropped 22%. So I was trying to compare it to leverage in the fact that it adds a little extra risk. It does, though, dampen the volatility. The income itself dampens the volatility, but not if you're spending all the income. So if the market's down, if the market's down 10%, SPY-I paid you 12%, your account's going to be your income account in a safe company. SPY-I is one of the best ones. That's what I'm using for example. But they can't help it if the market goes down. There's nothing they can do about it. Same thing's going to happen to JEP-I or JEP-Q or any of these. So, I mean, that's just, there's an extra element. So maybe a better comparison would be to compare this to a reverse mortgage. There's some people that have a house that's, worth $2 million and they want to get their money early. Well, a bank will darn sure do it. They will give your money early. They'll give you an income. What did you do though? You capture growth. I mean, if you live 10 more years and your house would have been worth $2.5 million, that $500,000 is the bank's. It's a service. There's a cost for every service. It's the same thing with SPY-I and the SPY. Obviously, you'd be better off in the SPY if you didn't need income. And then there's the debate. Even if you do need income, you can sell shares at the SPY. But in any event, yeah. So none of these. I mean, nothing's going to do well if the market goes down 12%. Not even SPY-I. SPY-I will drop 22% if the market's down 10%. The NAV will just because of math. And it doesn't mean it's not a great fund. But anyway, that's why, what I've always said, I say 60-20, not financial advice, but the way this is the way I advise the people I'm able to advise. And that's my dad and my brother-in-law and my other brother-in-law, 60-20-20. We don't want to give up on bonds and REITs especially my brother-in-law, because my brother-in-laws are in the top tax bracket. They use municipal bonds, muni bonds, but also corporate bonds, and also just a regular T-bill and T-note ladder, those types of things. You don't want to give up on those, but you can. I think in my opinion, not financial advice. You can mix in a little bit of these other liquid alt investments. They don't have to be covered calls. It could also be, there's other ones out there that it could be closed-end funds, CLM. It could be whatever, but you mix in some other type of income from another source just for a little diversification. But yeah, but so these aren't, maybe these aren't, I mean, obviously these aren't leveraged, but they do add an element of risk in the same way that a reverse mortgage does, because you've sold your upside for the present day, and the company will do that for you, but there's going to be a fee. So anyway, that's my rant for today. It's not really a rant, but it's probably stupid to call them leverage, but I also said they're like a cousin to leverage, but I meant as far as causing risk. All right. So, okay. Yes. You learned that the hard way. You still have BT. Let's look at BTCI. Gosh darn it. I'm sorry about that, man. Let's get rid of this one. No. Let's get rid of you. Let's look at all BTCI and say you would have got IBIT instead. All right. Well, yeah, it depends on when you bought it. But if you bought BTCI this summer, yeah, my gosh, because not everyone gets it the day it comes out. In fact, very few people got this thing the day it came out. So there's a lot of people hurting in this, but the same people are also hurting if they just would have gone and bought HODL or something It's not BTCI. So, I mean, it is, but like I say, it is though, because BTCI is giving you an income. So if you're spending the income and then the NAV is also going down, it's double. Yeah, I get that. But like I say, you could have bought HODL if you just want a Bitcoin investment, but those investments have been no good lately. I mean, the average person that got HODL, unless you got it October 17th of 2024 or before, it looks like on the chart, you're down right now too. So it's just, I mean, you have to pick stocks to go up. Anyway, yeah, that sucks. That sucks. I'm sorry about that, DGen. Well, yeah, that's the thing. The company can only control what they can control. Like I say, that's why I gave that example, SPY. I wasn't trying to pick on, but I mean, what NEOS is doing that's special is they're giving you low funds that pay a low amount. They don't have any magic thing they could do to keep it from going down. They keep the NAV from going down, but instead of paying you 30, they're paying you 12. And so everyone says they're super stable. Well, so's Big Y from YieldMax that pays 12. So's anything that pays. I mean, any decent fund, JEPQ, JEPI, Bali, Tuggin. Once you get into the 9, 10, 11 category, there's lots of them. Yeah, no crypto ETF safe right now except maybe Winner. Oh my gosh, yeah, the inverse one. What does that say? You drop GX, dropping block soon. Besides that, I have ISPG. Gosh darn, I'm so sorry about that. DJed. All right, Marcus says, I also have those two, but I have ISSB and I have blocks. I don't have GX. But I'm still green on them. Also, I believe in their ability to recover. Oh, yeah. Yeah. But depending on your situation, though, I mean, you have to make sure that it's, yes, they'll recover someday, but how much will they cost you on the way there? I mean, I'm really convinced the Bitcoin's low is at 60. It's the Fibonacci retracement from the beginning of Bitcoin, where it hit. And I don't see any way we go to 35 or 40. And I'm not that Fibonacci retracement's magic, but I mean, are you good? If it does, my gosh, can you believe that? I mean, if it does, holy cow. I mean, anyway. And I don't know, maybe with this war starting, that's always what it takes. Some kind of a war starts, or maybe not the war, maybe like there'll be some kind of liquidation in China, some kind of a Bitcoin hedge fund will blow up. It'll cause some kind of contagion, and then the war will break out, and then that'll make Bitcoin take out a new low. I mean, yeah. All right, Mark is waiting to see a dividend on and an X date on which one were we talking about? Does anyone write option? Well, probably one of the new ones we're talking about. All right. But it's always good to wait and see. That's what I did on blocks. And I waited for a couple of months and then bought it closer to the highs than the lows. But I was telling all you guys it was great. I mean, I wasn't shy about saying how much I love it. And so you have any yet? Well, yeah, I'm going to get some. And I finally did get some, and then I bought some more and I've been buying it all the way down. So anyway, I'm trying to think. I had my account up. Oh, my computer died. Let me restart it and I'll tell you where I'm at on it too. Oh, you bought BTCI at 60, 50, 40. Hey, with a name like DGen plays 4 years or whatever, I always pictured you as a 30-something Bitcoin maximalist. But also because you're interested in funds like that. But anyway, BTCI is a fine fund. If Bitcoin wouldn't have dropped that much, you'd been fine. If Bitcoin would have at least held 100,000 and been chopping around, you probably wouldn't have been you may have still been disappointed, but man, this was a big move that happened. To see an asset drop 35% in 2 weeks. I mean, it went from 130, or not 2 weeks, but like a month. I mean, it went from 130 to 60. I mean, that's a butt whooping. Nothing, no, I don't know any strategy, any ETF that's going to hold up under those circumstances. So, okay, Mark is saying on blocks and GX, I've been up in both since inception. They're both up 10% on total return. Well, I mean, we had blocks up earlier, and I could just tell by looking at the chart and knowing where I bought it, I'm down because these charts are total return. But I don't know. This chart doesn't factor in drip, or actually this top chart does. And actually, but if you really look close here, these are, well, no, I don't know. All right. If you really look close here, oh yeah, that's what I was. If you really look closer, BTCI is up a little bit in the time that, anyway. Yeah, that was on SMRF. Okay, so back to SMRF. Yes, on SMRF, that's the one that's the nuclear and the tech together. And Mark is like, yeah. And then you just wanted to qualify. In addition to that, you also want to see first dividend and a, and whatever else. Two things. I remember what you said, but I forgot. I mean, yeah, X date, the dividend and the X date. Yeah, because we don't know what day it pays on. That can make a big difference. BR, greetings from 75 and sunny Georgia. Yeah, I just came home and just took a shower. I just went on a quick little walk with Jackson, and it's about the same thing here. I'm trying to see what it is, but I'm not sure where to look on this one. I mean, on the windows, it's always down here, but it's on my wallpaper here. I just have to go like this. Anyway, it's no big deal. Gosh darn it. You got to be kidding me. It is. This isn't brain surgery. It's 82 degrees in Austin right now. All right. 39 and overcast, but at least it's not still frozen. I know for a while you guys couldn't get out of your driveway, couldn't put the trash out, couldn't do anything. All right. On Webull, it said blocks is down 598 cumulative return all time. Yeah, I think, let me see here. OX. All right. I'm still going to compare it to HODL because, yeah. Okay. So blocks, according to this, maybe this is wrong, or when did HODL come out? Maybe blocks came out before. Hang on. Let me just put SPY in here, something that's for sure been out long enough. Okay. Blocks came out April 20th. Okay. Now we found out the real reason I'm pumping the fund. I'm just joking, but you guys always make April 20th jokes. Well, blocks came out. Oh, that's the wrong blocks because that's saying April 20th, 2012. Gosh darn it. Okay. So they had a change, obviously. Let's go. Okay. Blocks really came out June 17th. And I remember it well, last summer, 2025. Okay. And went straight up in a month, 50% pretty much, or 2 months. I mean, that was a face ripper of all times. Such a face ripper. Now, this thing's showing up 4.12 without reinvesting. But if you did reinvest, and reinvesting doesn't always do better, it depends on how it gets there. And in this case, the reinvesting, you're actually behind a little bit on total return. I don't get some of those apps. Yeah. Okay. Well, I got you. I got you. No, I think Robinhood's a good place to go. I can look on Tasty Trade and get a more official, find out where it is too. I mean, what the official total return is. There's always stock analysis. There's some good services out there. This one is just fast. And I just, that's actually why I actually subscribed to that other service, ETF Central, I just showed you, because I'm trying to find a better way to look at this stuff than this stuff. For sure, I'm trying to. Whatever you did, Skeptic, you are a G. Skeptic is a G. I'm going to open my Tasty Trade and see what's going on there. All right. Let's see. Do you guys want to look at, let's look at some stocktools.app. No one ever told me there. They asked where this picture was taken, and I didn't get any answers, but it's an easy quiz. I mean, but anyway. All right. Let's see. We want this one. All right. I'm going to get Stock Tools up and see what else is going on. Oh, darn it. I meant to type it in the address bar. So we'll look at it on a one-day time frame. Let's see if YieldMax continues to dominate. They dominated that one little chart I look at. But I don't have as many things on there. So I mean, that doesn't have lots of other stuff. So all right. So on a real something that has all the contestants, MST is number one, SMCY is number two, which is YieldMax. YieldMax is having a good day. Then Granite Shares got in on the action with some SMYY. MS2 from Rex is doing well. MSTW from Round Hill doing its usual great job. It underperformed, or no, it outperformed. Okay. Marnie is, underperforming, but at least it's going up. BITX had a really good day, and I looked towards the end of the day. BITX was up more than anything else in my portfolio, which is amazing. That one's done terrible. I don't know how's that one up today because Bitcoin was down. Because that one hasn't been great, and I mean it's the good news. It has uncapped upside, but the bad news is it's uncapped at night, and the other bad news is in a bear market it usually goes down at night. It doesn't usually give you an advantage. Maybe for whatever reason we had a big move up overnight, and then it sold off afterwards, and they capitalized it or something. Tuttle is also trading this really actively, so he's not afraid to cover and stuff when he thinks the market's going the other way. So maybe he had a trade on, and when the market started going, he took it off for a quick profit. I don't know. Whatever. I'm happy with that. Yeah. Usually it's K Silver, K Gold that's up the most, or blocks, to be honest, on an average day. But today I had, K Silver was up 1.4, ULTY was up 1.4, BITK was up 1.2. So actually my best performers were K Silver and ULTY today. Blocks was up 1.2 also. Then Salty was up 90 basis points, 0.9 of a point. Feet, I have fractional shares of Feet, but even it was up today. In K-Yield, I have good shares of K-Yield. That was up 0.8 of a point. I have fractional shares of YMAX. It was up. Misty fractional shares. It was up. AMDY is such a dog. Or it was a dog for me. But it hasn't. Some of these. Like Misty. Okay, I'm in Misty at 50 and it's trading at 23. I've caught it on my ULTY is doing good. I'm in at 7, but that's pre-split. Oh no. So it was a 10. Was it 10 for 1 or 5 for? It's 10 for 1. Yeah. So that's 70. Okay. Yeah. So I've lost half my money in that. That's right. Because it's trading 34 and I'm in at 74. K-Silv, I'm in at 25 and it's trading 37. Heck, that never happens to me. Not on these type funds. That one's incredible. But every single of these other ones I'm down, but yet I'm up like 8% since I started this. So, you know, it's not about the NAV. It's about the NAV. It is about the NAV, but it's about the NAV plus the yield. And a lot of these, the yield has made up for the NAV, and some of them it definitely hasn't. All right. Anyway, LFGY, I missed. I was just looking to see if BITK was really up, and it looks like it closed the day up 1.2 according to. So maybe maybe these numbers are delayed. Oh no, that's for a month. No wonder. Okay, well, let's look for a day. All right, so for a day, actually, there's no way. I mean, okay, this is obviously wrong. Yeah, because LFGY was up, but not that much. I mean, those all had good days, but not that good. But now let's look for the past week. All right, for the past week, it's all about COIW. This just doesn't seem right. I wonder if there's something wrong with this. I wonder, like, if there's a situation. But the COIW had a good week. I mean, let's see here. Let me put it on daily bars. I guess COIW has had a pretty good week. I'll be darned. I mean, this was Monday, Tuesday, Wednesday. No, so this, okay, so that was Friday's close, but this is Monday's open. From Monday's open, it's gone up $1, and it only was started at $12, so it's 1/12, otherwise known as 6 1/4 or 6.5%. So, but if you go from Friday's close, it's up about probably 12%. Yeah. Anyway, wow, good week, COIW. We need a lot more of them. We could use a lot more of them. So let's look at blocks. We were talking about blocks as total return. Let's see what this says. We'll just compare blocks to SPY just to have something to compare it to. Or SPY is fine. All right, at comparison, and then it puts it in down here somewhere. Let's see. All right, there is blocks and SPY. And so then you can open this up, and this gives you basically that other tool, but in a lot better format. So let's see what detailed analysis gives us. Okay, so this right here is blocks with the cash reinvested. But this only goes back as far as whatever this goes back. So we could do custom, but let's just do 1 year. It's not going to answer our question. I guess we have to do custom and put in the starting date, but I never use this tool and I always forget how much I like it. But let's just go back and look at blocks and SPY over a year and just see what else we can spot. All right, so I have to find blocks first. Let's see, how would I do that? I guess alphabetize it, yeah. Alphabetize it and find me some blocks. There's Bali over the past year. It's plus 12%, and the underline was plus 12. It's catching all that upside. Heck yeah, Bali. We never talk about Bali, but so why am I not seeing blocks? Do you guys not see it either? I think there's some kind of data error on here or something. Anyway, well, we talk about other stuff. we can surely talk about some other stuff here. Hey, what's up, Mike? We got one of my friends from up north of the border, Canadian, Mr. Health and Wealth, otherwise known as Mike. Anyway, nice to see you, Mike. Appreciate you being here. Okay, so let me try to catch up with what you guys are saying. So no one told me where my picture was yet. I bet Mike knows. Where's this picture taken, Mike? And there's a famous bridge right there. And that, I mean, I've been on it before. Not that famous, but I mean, anyway. All right. It's not in Canada though. It's in my favorite state. My second favorite state. Texas is my favorite state, of course. Yeah. It's is it? I didn't even see the show Big Little Lies, but it's a place called Big Sur. It's the road between it's the road between like Santa Barbara and Carmel. It's how you get to Monterey. You drive to Monterey or Carmel's at the end of that road, and it's also the end of kind of the Big Sur area. But it's beautiful up there. But yeah, it's been in a lot of movies. I'm trying to think up there, Big Sur. That's a beautiful area. Yeah. All right. So let's talk here. Marcus is saying blocks is plus 26 on GX, just compared to GX. Last time I pulled a chart on GX, I think it didn't look like it was doing that well. On my way in, 3 ads, letting them all roll, baby. All right. Yeah. Hey, Fish. Closed in funds today. Still don't know why CLM is dropping. Okay. I decided we're going to have closed in fund Thursday night instead of Friday night, because a lot of you guys are out on Friday night. It's been one of my more popular shows. And also I'm kind of trying to pander to the closed in fund crowd, since the closed in funds are kind of rising to the top of the heap here, but it's just because AI and crypto has been selling off. Blocks will be back in the top of the heap someday soon. Maybe not, who knows? But anyway, yeah, we'll do closed in fund Friday night. Seriously, I'd say the majority of the top 10, and I'm trying to think if I have it up here. I don't think I do. The top 10 right now in the daily factor is, are closed in funds. So now, and I had a prediction today. I'm trying to expand. I'm looking into building the spreadsheet. And I need some help I need to do some programming to make it happen. But I'm trying to expand for the max factor to have every fund that pays a yield of more than 5% or something. And I've been informed there's many of them, 700 or 800, 900, something like that. So if I could build a more resilient spreadsheet, which I'm having Claude help me on, I'm going to do that. But then Ola, who was it? BR was telling me today in Discord, he predicts that once I have all those extra funds in, that the high yield funds will never see the light of day again. If I included everything that made over 5%, the high yield funds will never see the light of day. And I don't think that's true. The high yield funds are excellent risk on investments because they pay high yield. The closed-end funds don't pay 50, 60%. Those ones that pay 50 or 60%, and they're based on crypto or AI, when the market's up 50 or 60%, and it does that, in AI and crypto, it did it this summer. Those types of funds can get NAV all day. Their price goes up and they're paying a yield. So no, I think in a risk on environment, those type high yield funds will rise back to the top, but it's going to be a lot harder. And for all I know, maybe they have closed in funds that are also real risky, but I'm just saying the fact that the high income funds are just take on more risk. So they have more reward. They just need the market to cooperate. Okay, Mark's best performers for the day are SLJY plus 2.9 and GDXW plus 2.8. I mean, yeah, K-Silv, I can believe K-Silv's up 1 point. I mean, but my best performers, I just resorted to make sure this is right. Yeah, I mean, ULTY is literally my best performer. I don't remember the last time that happened. It just had a heck of a good day for it. But on my entire account, it was, I'm looking right now. Anyway, it'll take you a second to come up. Plus 0.5%. I'll take plus 0.5%. All right. Fish's best performers are Chippy, GDXY, NV2. From here on out, only adding GPIX. Oh, that's a good one. We don't talk about that one enough. And we don't talk about Bali and Tuggin, and we don't talk about GPIX enough. Let's compare GPIX to the SPY just for starters. Okay, great job, GPIX. That's over 1.5 years, staying pretty close to it. So let's compare GPIX to the SPY. They're both good, but GPIX looks a little better. You know, we have 15.5 to 14.25, basically, over 1.5 years. Let's compare GPIX to Bali. That's the closest one yet. Bali's really close. Heck yeah. Let's compare GPIX to Tuggin, Tugn. Okay. Well, Tuggin may take extra risk also. You can't just look at a fund and say because it's doing better, it doesn't necessarily mean it's better. I mean, you know, but or maybe Tuggin pays a 4% yield and GPIX pays 8%. That would explain the difference. You know, Tuggin pays way less yield. So let's see what Tuggin does pay. It pays, how do I annualize? Mark, how do I annualize 411? If it's been 1.5 years, what do? I divide it by 75, right? So if I divide it, so I need 75% of that number, I think. Or no, I divide it by 66. If I'm taking this as 1.5 years to make this a year. So divide 4.1 by 66. Isn't that how you do that one? So it comes out to about 3 if it was a year or something like that, which is about 15%. So if, assuming I did the math right, yeah, Tuggin does pay all right. And so does GPIX. I mean, GPIX pays I've never known how to do that, how to back that equation out of there. So multiply by 2/3. I had my mind was in the right place. Okay. So you multiply 4.1 times 0.66. You could just use 0.70 to do it fast, and you could use 4 to do it fast. So it'd be like 280, and then add a little bit for what you did fast, 290. So yeah, it looks like it pays 12% or something. Anyway, so that's not bad. All right. I thought that was how you do it, but I wasn't quite positive. I knew you would know. All right. Hey, we have Frank Raymond. I don't believe I've ever seen you in here before. Frank, thank you for being here. You may be a first timer. If not, I apologize. I haven't noticed you, but thank you for leaving a comment. Okay, so Marcus is saying no max total return on GX is plus 26. Okay, well, let's just look at GX first. But yeah, GPIX looks wonderful. I mean, it looks like it's been doing wonderful. It's, you know, Goldman Sachs. I mean, same thing with JP Morgan. I mean, Goldman Sachs and JP Morgan, both of them charge really small fees, and they probably make money elsewhere. And these are probably just loss leaders for them. Also, their average customer has more net worth than the average Yieldmax customer. So, you know, you put something that's 8 or 10% in front of a multimillionaire, it's more attractive, you know, but the retail really likes Yieldmax, or not only Yieldmax, but also Curve, you know, other one, you know, ones that pay, you know, Simplify, you know, 15, 20, 25%, whatever. All right. GX. So let's look here at, let's see what Marcus is talking. So GX versus blocks. I just want to see how they looked against each other. Okay. Well, since inception, they're about tied. since the inception of blocks, they're about tied. But now let's put GX against, I don't know a good benchmark for GX because it's global. But anyway, just against the SPY, it's, you know, it's done 7% in a year and a half. Tuggin's about 10. Okay. All right. Well, and it's okay. Well, so what is GPIX about? I mean, it's about 8 or 9 though, right? I mean, I think the deal with GPIX is they write very few options. I saw a review on them, and they maybe have 10, 15, 20% written at any given time, but it depends on it. But they vary that. It can be a full overwrite, but it can also be a less overwrite. And I've heard that they, you know, intentionally don't write very much. Same thing with NEOS. NEOS usually doesn't cover all the way. And NEOS is doing the thing where they sell a 6-month option, cover it 2 weeks. The last 2 weeks can be a problem, but that's the tasty trade method, to invest in the 45-day time frame, cover with 20 days to go. That's tried and true as far as stable, you know, as far as stability goes. That's kind of the thing, and that's what NEOS has done. And I think that's why people like SPY so much. It has a solid strategy, and it doesn't mean that it won't go down if the market goes down, but it has a good solid strategy, and they are doing a good job. Hey, SB, thanks for being here, man. Good to see you, buddy. All right. For some reason, my prior response didn't show up, which was, 12%. Okay. All right. But yeah, GPIX, heck, you could do worse. You could do worse. Now, let me know. So are you going to be mad because this is the way it happened to me. I'm not saying it's going to happen to you. It's a smart thing to do. It's the right thing to do. You made a good decision, Red. So you get GPIX tonight. Good decision. But then tomorrow, for whatever reason, or, you know, here in a couple of weeks, the war in Iran doesn't materialize, and Trump comes out with something that's super bullish for crypto. And then maybe the new Federal Reserve chief, the market really likes it, and the market goes back to all-time highs and goes past that, and Bitcoin starts going back up. I'm just saying that's what would happen to me. Because then in that case, but you can't predict the future. That's what makes the market fun. If that would have been the case, then a fellow would have, in hindsight, would have been better off in one of the more aggressive ones. But yeah, I don't think that's really something to worry about. I think this is going to be a good year to be in the less aggressive strategies. But you have to be resigned to the fact that that at least with me, the market's always going to do whatever it can do to mess me up. If it did it. You guys have seen it do it to me. I thought I was so smart getting out of Alti and then piling into blocks, because blocks just has so much more upside, and we're going to get in crypto especially, and we're going to get an October, remember the October, and then even when it started going down, come on, it's going to bounce at 100. There's no way it's going to go under 90. Remember that? And so I kept buying. Well, I made the bet. I thought that was good judgment. I'd probably do it again. Not if I knew, but I'm just saying. So, the market just always does what it can to disappoint. So it's what makes it fun. If it always did what you wanted it to do, it'd be no fun. It'd be too easy. It'd be great to have the extra money that would go along with it being easy. But it wouldn't be any fun if it always did what you want to do. We wouldn't have, that's half the stuff we talk about. What's the market going to do? What do you think we should do here? That's what makes it fun. All right, Marcus, KIQQ yield equals 10% during these market conditions. In a bullish market, it's probably 14. Not bad for dynamic NASDAQ, not at all. Well, and I've been making a lot more funds on Buffer, or videos on Buffer. I've had like 2 of them. I had how to prepare for the coming bear market with Buffer funds. Then I had one a few weeks later. But my first one I gave out, check this out. The first, I was looking at a fund called Synth, and Synth is doing awesome. Last time I checked, it was. This is doing better than any of these BS things that you guys are talking about right now at SPY or whatever. Synth's blowing it out of the water. No, but I'm just joking. Synth actually just pretty much follows the SPY. but it doesn't pay a yield. It pays like a 3% yield. So it's not an income fund. So of course it should. No, but what these guys do is these guys, instead of buying the SPY, they use deep in the money options or synthetics. So they can take 10% of their money and replicate like 90% exposure to the SPY, like with the 90 delta option that they roll every quarter. If the market goes up, that 90 delta option gets them 90% of the upside. But if the market goes down, the most they can lose is 10%, because even if the option goes to zero, a 90 delta option that goes out a quarter doesn't cost that much. It may cost, 5 or 10% of your, but so guess what? Then with the other 90% of their money, they buy fixed income stuff. They buy bonds and corporate. And so this is I think that would be a good black swan type situation. I made some content on that. And then I compared it with one called Swan that does a similar strategy, but not nearly as well. And then on the next video, I think we did look at KIQQ. And then I have a third one I'm working on right now, but I forget what was in the third video. Now, this one hasn't been out as long. KIQQ came out, January 8th. So it's a victim of a bad market. But see, Synth has better black swan protection. Synth just can't drop that much because all it owns an option. It has an option and a bunch of fixed income. So the next frontier now, the one I'm writing about right now, is there's one called QRMI, but it's not that good at all. And there's one called XRMI. But one of my friends emailed me and was interested about QRMI and XRMI. And I need to make a new installment of the video. So I'm going to put those two in there. But then I'm also going to throw some other ones in there too. And then don't forget there's QQQH. I think I talked about that one. Now it's not nearly as good as Synth, but Synth pays like 2 or 3%. Triple QH pays like 8%. So it's not supposed to be as good. I mean, it's totally understandable that it's behind Synth because Synth is a growth, it doesn't lose any NAV to yield, basically. I mean, I guess it did. Maybe it pays more like 5%. But that actually, I mean, maybe Synth pays more than I thought. That actually is pretty good right there. Okay, well, let's hang on here. Maybe Synth must have paid a one-time dividend or something. Maybe when they have a good year, they do that. I mean, that they probably do that. So yeah, see Synth here. Look at this. They just have notes, and then they have the 6750 and call, I'm sure, and they have the 7850. And I bet that 4,000 is a put and as part of a synthetic or something. Well, yeah, right here they have a 7,000 synthetic. They own the 7,000 going out till January, and then they're short the 7,000 put. That gives them 1-to-1. That's 1-to-1 market right there. That's it right there. And these other ones, because they do it every quarter, and these other ones are probably structures from previous quarters, but they can basically replicate the market without spending as much money as you need to spend if you bought the SPY. They can literally, for 10 cents on the dollar, they can replicate the market. And with the rest of it, they can use bonds, and bonds, of course, will give you cash and cushion the downside. Bonds aren't a guarantee either. If interest rates, go up, that your bonds can lose NAV also. But but bonds are steadier than stocks generally. But yeah, I really like that Synth one. This Synth one is, I mean, it's one of the better ones out there. I don't know what the deal is. QRMI, Global X. I mean, that could be part of the problem. It's a Global X. They call it Risk Managed Income ETF. Anyway, I'm doing a review on it now. I guess you guys have to watch my review. But this one's just a dog. I mean, look, it pays 12%, granted. Okay, it pays 12%, but it's based on the NASDAQ, and it's going down and to the right. It's dropped from 1670 to 1570. I mean, that's all right. But if I wanted one based on the NASDAQ that paid 12%, I'd just get Triple QI or Big Y from YieldMax. And that goes up and to the right. This one actually pays 14%. Big Y from YieldMax pays 12%. I mean, but yeah, so I don't see the use case for QRMI or XRMI. I mean, they just have had bad performance. They've been around forever. You go check this out. QRMI, and we'll just look at it against the Qs. They've been around since, and I thought it'd been around since 2021. Maybe that was XRMI. No, I guess just 2024. But you can see the use case for them right here. Look at this. I mean, because they're hedged, you know, the Qs dropped from 11.5 to 9,000. So that's, what is that? 2,500 on an 11,500 base. That's like 21%, 22%, something like that. Qs are down 22%. And here we have XRMI. You know, it's at 10.6 and dropped to 10.1, dropped $600 on a, you know, it's about a 5% drop. So, I mean, that's the whole idea. But, you know, your upside is just so capped that even factoring in the drop, you would have obviously been better off with triple QI, and you would have also been better off, you know, even if you need an income, all you have to do is add an I to the end of those triple Qs, and you have a good little income fund that does well, you know. I mean, now this income fund lost almost what the NASDAQ did. It went from 11.5 to 9. Now it lost 500 less. I mean, and because, like I was saying earlier, the income from these is a slight buffer on the downside. Because the SPY went from, or the Qs went from 11.5 to 9. This thing went from 11.5 to 9.5. That extra $500 was just the dividends. I mean, was probably the accumulated yield that caused a little bit of buffer. But then it's off to the races. So I'm not seeing a use case for XRMI, especially not in hindsight. Maybe in a deep pullback or something, you know, I don't know. I'm going to have to look into that more. But yeah, and I'm more inclined to want to go with something like a KIQQ or whatever. There's some ones that just came out recently, but we don't have enough info on them. There's some ones that have, you know, like hang on, I want to look at this. Okay, Crane shares in Sperry X dynamic buffered high income ETF. I mean, it's not starting off looking real good, but I mean, like I say, the market's let's see. Well, I mean, that's a good look for Neos right there. It's only 5 weeks. So, but I mean, what does KIQQ pay for a dividend? 10% yield? Well, I'd say triple QI is the play there because it's paying 14% and doing better on that. It's only 5 weeks. So who knows? But they're both based on the Qs, right? Supposedly. I mean, so I wonder if KIQQ is using weekly or dailies, because that would make it more risky, and that would explain. But if they were using weekly or dailies, you would think they would be able to pay more. They would be able to pay more than 10%. Triple QI is using monthlies and not even selling all of them and able to pay 14 or something, or they've been paying 14 lately. So, but yeah, no, I hear you, Marcus. I'm sure it's good. I'm sure it's good. I think of the ones that we have enough track record. If you stuck a gun to my head and made me get one of those, I'm going to, just as of right now, I'm going to say triple QH because it's Neos. It's based on the Qs, and we have at least a couple months worth of records. It's been around since May. Or April or something of 25. Yeah, I mean, I'm going to say that one right now, but who knows? Who knows? All right, guys, I can't believe there's 19 of you guys here. We've had a good crowd today. I'm running out of stuff to talk about. If you guys want to ask me about anything, put it in the comments. Remember, not financial advice. Consult a licensed planner. There's my PayPal if you would like to donate to the channel, help me pay my AI bills. Other than that, you can also, it also definitely helps when you guys just show up and watch my live streams, which you guys all do, and I appreciate it. And it also helps when you like and subscribe. All right, guys, so it's settled. Closed in fun Thursday night. Be here at 8:30. 8:30 your time, 7:30 my time. All right, guys, thank you so much. You have a wonderful evening. I'll talk to you soon.